Coming up in today's video, Japan and US tariff negotiators agree on continuing talks. And the Australian dollar was strong last night because the RBA holds interest rates despite expectations of a rate cut. Today we see stocks sideways, the Dow Jones a little bit lower, although the Russell holding up strong, NASDAQ side, and gold is taking a plunge lower. We'll take a look at gold prices and the strength in the US dollar. What could that be about? Bitcoin's up and oil also making a push higher today as well. First up, we'll take a look at the S&P 500, which has had a quiet push beyond its all-time highs. I mean, to its credit, we've had a nice, overall multiple days up last week, but then this week giving back a little bit of those gains so far. I really don't see any major negative headwinds right now for the S&P 500 and stocks in general, as you've got great earnings growth, but we are entering an earnings season. Part of the reason we had such a strong rebound in stocks was because in the first quarter, companies put up some really good earnings and forward guidance compared to expectations of much worse numbers due to all the tariff concerns. But as we go into the second quarter, for those watching indices, keep a close eye on earnings because, of course, if there is some material weakness in earnings reported by the US major companies, it could bring the indices lower. In the next few weeks, earnings season will kick off and we'll start hearing from the financial sector as well as big tech like Apple, Amazon, Google, and the rest of them. So what has really gotten to us this point at all was the big push in the earnings season that we saw in Q1. It was a really strong reported series of, the big cap companies, Meta, Microsoft, all those companies really put up some very strong earnings compared to what analysts were expecting. Additionally, the market is expecting the Fed to cut interest rates. It's another positive catalyst, and the worst case scenario of the tariff circumstances seem to be confidently behind us. The market is now looking forward to deals rather than fearful of, massive tariffs being slapped onto every country who doesn't comply with the Trump administration. And as I showed you at the beginning of this video, promises of continued trade talks for the time being are a positive catalyst for the stock market. The EdgeFinder has a bullish reading on the S&P 500 and the NASDAQ because I've got to show you something pretty big. Yes, you guessed it. They bought. The commitment of traders data came in one day late here today because of the federal holiday, July 4th, that occurred last week in the United States. So we got the updated COT report, and I want to really show you guys something very interesting. If we take a look at the S&P 500 and we look at the latest weekly buys and sells, check this out. Long contracts were added dramatically to the SPX, and short contracts were decreased heavily as well. Meanwhile, the NASDAQ saw an uptick in long contracts and a significant decrease in short contracts. Another very bullish week in terms of institutional activity on the major US indices. And take a look at the US dollar. This is a pretty interesting one because what we can see here is that the US dollar added longs, but also added a smaller amount of shorts. Noticeably, for those who watch gold, we can also see an added increase in gold long positioning and a decrease in shorts, a very bullish week for gold as well. And on the sell side, we saw things like the Nikkei, the Russell, the Canadian dollar, the Swiss franc, and the 10-year treasuries, which I thought was a very interesting move in the latest reported filing. By the way, you can get access to this data for a massive discount right now. Our company specializes in building some of the very best tools for the retail trader out there who wants to take their trading to the next level and look at the same tools and data that institutional players at the table are doing. By being able to track institutional buys and sells, this gives traders a huge ability to track more insights and make better informed decisions about their trading. Right now, we're offering our biggest discount that we do all year long in the EdgeFinder, and all the information can be found in the description down below of this video. If you send us a direct message using the very first link in the description, you'll be connected to a real person on our support team who can get you up to 45% off. We offer extra discounts for people who communicate with us and chat a little bit with us before purchasing the tool so that we can make sure it's the right fit for you and answer any questions you might have about the product. So like I said, take advantage of the biggest discount all year long. All the information can be found in the description of this video below. And here's an updated look at my Russell position. If I pull up IWM, this is a current position that I have in the markets, and it is my biggest winner and current biggest position of the year. You can see I'm up almost $43,000, which is an insane amount of money. Now, granted, full context, there are times where I take loss streaks that can be $30,000, $40,000 in the hole. So understand, when I show you a really big winner, there are also losses that occur on my channel, and I do my best to show you all of it on my channel. I know that, when you go through social media, it's very easy to see people who only ever show you their winning trades. Currently, I have a lot of winners because I am in a lot of index and stock positions from the dip that occurred this past year. If you watch my channel, you know very well that I was obnoxiously bullish during during the sell-off that we saw in April. But to be fair to my viewers here, I was also bullish in March. So I was early to the idea, but ultimately it played out very well, with a bullish perception definitely being the right way to go for the last few months. However, I think it's important that we take a second to look at market sentiment to understand what the crowd is now thinking about the stock market. And this is where I get a little bit more nervous. If we take a look at the latest AAII Investor Sentiment Survey, what we can see is for the first time in many months, the majority of survey respondents are actually now on the bullish side of things. For many months, we have seen a dramatic overall bearishness in the markets. And if we actually scroll down, we've built these tools to help visualize things as well. Bullish sentiment has been on the rise for a while, and bearish sentiment has been on the decline. What this signals to me is that when everybody was bearish over here, I felt much more confident getting bullish because the risk to reward was skewed, in my opinion, and what was ultimately the correct call. Risk to reward was skewed heavily in favor of being long, where there was a lot of potential reward, as opposed to being bearish, where, again, the market bottomed out right as everybody kind of got peak pessimistic. In fact, right around this low, take a look. This was, if we hover over this, bullishness was at a low around the March 31st to April 6th. I'll let you go take a look at the charts at that time if you'd like, but newsflash, that was pretty much the market bottom. So we track very heavily on this channel and within our software market sentiment to get an idea of both institutional money flows and crowd sentiment as well. Looking at the put to call ratio, we do, however, get a little bit of a different reading. You can see that the put to call ratio spiked higher here, as perhaps a demand in puts is still very high. So this is where we're kind of getting a mixed signal when it comes to overall positioning. We see the crowd sentiment a little bit bearish here on the put to call. We see institutions very bullish, and we see on the AAII investor sentiment survey sort of a mixed picture going back to long-term historical averages. This is a pretty standard report. Most of the time, the market leans slightly bullish on this survey. It was only most of 2025 where we got the exception to the norm, where most traders were actually bearish. Switching gears now for the currency traders out there, I also wanted to show you what the retail sentiment, crowd sentiment sort of thing looks like for currencies. I've selected major currency pairs, but we can also include in our search here on the EdgeFinder minor currency pairs as well. And what we can do here is we can look at the contrarian signal to see which currency pairs are suggesting a crowded trade on one side or the other. So in this case, the way we would read this is that things like NZD-CHF, USD-CHF, Pound Swiss, CAD Swiss, these currencies are having a very strong proportion of retail crowd sentiment, very bullish on these currency pairs, which is suggesting a contrarian bearish signal as seen in red over here. On the flip side, if we take a look at things like Swiss yen, the Australian dollar against the Kiwi dollar, the Euro British pound, the CAD yen, Aussie CAD, and Kiwi yen, we're getting some inverse of that readings, meaning contrarian bullish signals, as most of the crowd is bearish. These tools and many others are, like I said, available within the EdgeFinder under the Market Sentiment tab. And as I mentioned earlier, the reason I keep harping on this is because this is the biggest discount that we do all year long, and the information is in the pinned comment or top of the description below. Speaking of the dollar pairs, which we just discussed in terms of sentiment, the crowd sentiment does seem to be very bullish on the dollar at this time. Just a reminder that when we take out the minor currency pairs, you can see things like the crowd is a little bit more short on things like pound dollar and euro dollar, and long on things like the US dollar versus the Swiss franc. So it's suggesting here that the crowd sentiment is a bit more favorable towards the US dollar, which we typically see in very strong downtrends in currencies, is retail traders tend to try and fight the trend here. And so this trend is still to the downside at this time. And I would not be surprised if we do see, as the dollar retraces up into this range, 98.99, I would not be surprised if we do see some further decline based on purely price momentum. And a quick heads up, if you're looking to get access to the EdgeFinder for free and you're a trader outside of the United States who can make a deposit of $5,000 plus into a brokerage, consider checking out the special offer available with 8cap. Now, here are the instructions to make sure that you do this correctly. If you're interested in exploring this offer, head over to a1trading.com/8cap. That's a1trading.com/8cap. And on that page, you'll find a specific sign-up link and some instructions on how you can deposit into your account and get access to the EdgeFinder completely for free. Essentially, you make the deposit requirements as listed on that page, and EdgeFinder is yours for free because 8cap essentially purchases it for you on your behalf. So if you want more information, it'll be linked in the description, or just head over to a1trading.com/8cap. Gold's down 1.25% here today. You can see retesting this longer term level of support and giving back some of my profits on this trade. It's very possible that this could result in a losing trade for me, but it is not a very large position. If I pull up the ETF that I'm trading, which is GLD, you can see I'm floating at this point now only 150, 160 bucks on this trade. And if we do break through support, I will ultimately get trailed out for a loss. I'm sorry, not trailed out, stopped out for a loss. I still have the potential to lose money on this trade. If, however, we do see an uptick in gold or the ETF GLD in my case, I will look to trail stops into profit. But specifically when we look at XAU USD, which is the spot price of gold, I'm looking for at least a push and break through these previous highs. Today, I did a deep dive on the commitment of traders data surrounding gold, and it was a good 10-minute lesson on how to read the COT report specifically with gold. So if you'd like to see some information about that, stick around for a few minutes, check this out. So we've got some fresh COT report data, ladies and gentlemen, and look what we have here. SPX and NAS, big buys. Whoo boy, look at this. So this is actually very interesting. And now you guys are probably going to guess. Anybody want to guess what my title and thumbnail of the week or of the day is going to be for the main video? Hint, it's 2 words. Anyways, SPX, NASDAQ. Look at this. What I really want, if you're somebody who's new to COT data, really, you can look at all sorts of fancy stuff, but this is it. Oh, you guys know my game way too well. I think I'm getting predictable. They bought. It's happening. Oh, that's a good one. I'll use that sometime. They bought, melt up, they bought. It's one of those things. If you're a regular, you're in on the joke. And if you're not a regular, you're like, Nick is an annoying clickbaiter. And I get it, but I've gone on this rant 37,000 times. Can you imagine if you spent an entire summer painting a beautiful, and this is a way exaggerated analogy, you paint a beautiful picture all summer long, a painting, and at the end of the day, you finish this painting, your heart and soul went into this, and you were expecting to put it up on an art gallery where thousands of people would see your work. But instead, it gets thrown in the janitor's closet and stomped on. That's what happens on YouTube if you make boring titles and thumbnails. And so people sometimes they're like, Nick, your titles and thumbnails are so dramatic and they're so annoying and they make me, but it's again, the reason you see my videos at all is because the videos sometimes, I mean, I don't have crazy views on YouTube, don't get me wrong, but the reason you see my stuff at all is because we've done our best to make it content that appeals to the algorithm and people click it. Right? So people love to complain, oh, your titles, thumbnails. But like people who know, they just get it. They're like, okay, yeah, that's what you have to do on YouTube. Otherwise, your stuff gets shoved in a janitor's closet. Ball out's in on the joke. I mean, if you're in on it, you like the thumbnails, you think they're funny, they're dramatic, and yes, they're ridiculous, but that's the point. It's almost kind of like a fine. If YouTube wants me to play that game, I'm going to play that game because otherwise nobody sees our videos. Trust me, like we've done cross comparisons. If I make a title that's just like, here's some trades that I'm looking at today, it gets like 1,200 views. And if we do a video that's like, you know, me freaking out and the market dropping like crazy, which tends to happen a lot these days across different stuff, those videos would get 10,000 plus. Anyways, that's my rant for the day. Thank you guys for hearing me out. Now that I have everybody's attention with my complaints, SPX and NAS, I mean, this is big buying. This is a pro-US week in terms of COT data. Look at the top 3. You got SPX, the NASDAQ, and the US dollar. Other notable buying contenders, NZD, love to see that. The Australian dollar got a bid. Interestingly, COT shows institutions buying right before the RBA surprised by holding interest rates instead of cutting them. They bought gold and silver. Check this out. Institutions went long gold. Decreased short contracts, increased longs. That's a very bullish week for gold. Silver, they decreased longs and decreased shorts, but noticeably they decreased shorts more. You guys like when I do these COT report breakdowns? If you're like, put a 1 in the chat if you want me to do more COT content, and put a 2 in the chat if you're like, no, this is boring. Move on. I do my best. As I just got done complaining to you guys about, I'm doing my best as a YouTuber to make content that people, resonate with. What I don't love so much is take a look at my poor old Russell. I'm long the Russell, and institutions sold it heavily. Added shorts, decreased longs. Interestingly. Okay, that's a lot of 1s. I'm glad to see that. Because you guys know I love tracking the COT report. It's a fascinating subject to me. That's why we've, built such extensive tools around it. Okay, now I'm going to leave it up to the audience on this one. One asset. Pick one, and I'll do a COT data history. We'll take a closer look. Do you want me to look at the dollar? Here's your options. I'm going to narrow it down because people are going to have all sorts of options. Give me an option of USD, NASDAQ, or gold. Let me know. Which one are we looking at? We'll look at some history because I think this is important. Not only do you want to, if you want to really analyze the COT report, you need to have everything in front of you, first of all. Second of all, you need to look at not only this week's report, right? You want to look at it all. People ask me, Nick, should I just be looking at net positioning? Should I look at latest weekly COT buys and sells? Should I look at history? The answer is yes, yes, and yes. You should look at all of them. Why would you not look at all the available information to track institutions that you possibly can? They're the winners in this game. They dominate this game. Why shouldn't we look at what institutions are doing? Okay. Gold is the clear winner. So we'll take a look at gold. Okay. So I'm going to switch over to gold here. And what we'll do is this is what I want to show you guys. How do we read this chart? Because this chart alone of the three is the most powerful, in my opinion. You can look at the net positioning. You can look at the weekly buys and sells. I like those two a lot, but this is the most powerful chart that I have to show you guys on COT data that we've built. So if I'm looking at gold, right? If I want to look at closer at gold specifically, and I want to say, are big institutions out there, the big money, are they buying or selling gold? Well, I can show you something crazy about this. Ask yourself a question. It's a rhetorical question. You don't have to answer in the chat, but answer this to yourself. Have you been short gold at all, even one time in the last few years? If the answer to that question, you just said, yeah, I've been short a couple times. Let me ask you a follow-up question. How's that worked out for you? Feel free to comment in the chat if you'd like, but I'm going to tell you that the vast majority of people who shorted gold in the last few years have been in pain. Now, I say that as if I know what it's going to do next. I'm not telling you like, oh, it was obvious not to short. But do you know who was long the whole time? Institutions. Aggressively long. Long, long, long. I mean, you can't find an example here, ladies and gentlemen, on the COT data history tab. You cannot find an example in the last few years of institutions actually getting short on gold. They've been long the heck out of this thing, right? So if you're not aligned with the institutions, if you're not following along with what big money is doing, right? And big money's not always right, but you tell me where on this chart institutions got it wrong by staying long. And I'll show you the COT data history, which has been aggressively long for a suspended period of time. Now, how can we read this for everyone at home who's new to the COT stuff? We're tracking institutional money week to week. The yellow line is really the simplified all you need to know line for COT data, okay? It blew my first account 18 months ago. Yeah. Short only once in 2024 and it was break even. There will be a time to sell, don't worry. You're correct. But how can we know when the time is right? Well, I'll tell you one thing, it's been really hard to be short because big money keeps buying the heck out of every dip. I can show you that. I'm not speculating that. I'm not telling you, oh, this magical candlestick pattern is telling me that. No, I'm showing you the data. The CFTC's weekly required filings show us what institutional money is doing. We've just built tools that make it possible for you to see them easily. So we can spot institutional money flow. Check this out. So the blue bars are the long positions, right? The red bars, and these are institution filters, right? So we're looking at net non-commercials. These are your hedge funds, banks, large speculators in the financial markets, reporting to the CFTC their positioning. What you see here is a whole lot of blue versus a very little bit of red. The vast majority of positioning on the institutional side of things has been very long gold. Now the yellow line simplifies it further and just shows you the percentage of longs versus shorts over time. And when I said you can't find an example in the last few years of institutions being net short, what we call net is a 40% or less is a minority, and a 60% or greater is a majority, okay? So if we're hovering over this yellow line again, look, 76% long, 78, 79%, 76, 64, right? The lowest it got was 59.67, which if you rounded that to the nearest whole number, that is still 60% of positioning was long. Even at the most proportionally bearish moment for institutional money, they were still very heavily long. Institutions for the last few years have been heavily long on gold. Have they been right for doing that? I mean, you tell me, look at the price of gold. They've made a killing. Institutions who were riding this trade long, you know, again, people love to think like, oh, they're selling into this. They're moving against, they're gonna take everybody's money. Well, maybe they will when it eventually turns. But if you've been holding your breath, you're probably passed out right now, right? Because it's been a long time where institutions have not only been long for a long time, they got more long. At one point, they were 90% of their positioning was on the long side of gold. Are you kidding me? Going into 2025? I mean, that was a mega profitable position for institutions.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.